It's great to be here today and to see so many people that know that the real action in financial markets is not in the US. There's nothing else important happening today. The most important thing is the Small Cap Summit here. So it's a great day to be presenting. So I work at Firetrail as a portfolio manager. You're going to hear from some fantastic funds today, but I'm going to spend the next 15 or so minutes covering off on the most exciting asset class, which is of course small caps and how we at Firetrail approach it. I'm going to touch on three key points. Firstly, the big opportunity that we see in small companies today, and the introducers have already alluded to some of those points. Secondly, one compelling thematic that unfortunately you just cannot get away from at the moment. And then thirdly, my personal favourite part of the presentation, one high conviction stock idea. Now, I mentioned in my introduction that Australian small caps are the most exciting asset class on the ASX. But when it comes to active small caps, as you can see from this chart here, they are also the highest returning. The median active small cap fund manager has returned 10.4% over the past 25 years or so, outperforming the index at 6%. And I guess that index is akin to buying every single car at the same price on the lot. Now, often in times of volatility where we're seeing big market drawdowns, I get questions from prospective clients, current clients, and annoyingly sometimes my mates as well. And they say to me, Fisty, you work in financial markets. Tell me, is now the time to invest? Should I put some money to work? Give me an insight. I have to tell them, I don't have a crystal ball. I'm not afraid to stand up in front of you all here today and say, I have no idea where the market's going. They're always very disappointed by that answer and they move on to talking about football or something else more exciting. But what I do know is that over the past 10 or so years that we've been managing this strategy, both at Macquarie and at Firetrail, we've been able to deliver around 20% per annum post fees to our investors. And well over half of that return has come from excess returns. And that 20% has been in what has generally been thought of as quite a poor environment for small cap investing. So to me, the message is very, very clear. If you're sitting out, waiting for a drawdown, trying to time the market, you're missing out on the excess returns that a good small cap fund manager, like the ones here today, can deliver you, and what that means for you to be able to compound wealth over the long term. Now, if you're anything like me, you're probably sitting there going, wow, that's quite a big gap between the pink and the green, about 4%. That's why I'm a portfolio manager. Why has the median active small cap manager been able to outperform by so much? I think there's two reasons. Firstly, the small cap index is much more diverse. The top 10 stocks in the ASX 200, I should say, they comprise around 50% of the total market value. In small caps, the top 10 stocks in our index, they make up just 14%. What that means, in simple terms, is that this is a stock picker's market. It's much more diverse. The portfolio managers here and myself, we don't sit around all day pontificating about the merits of investing in Westpac versus NAB, thankfully. We can go out there and hunt a range of diverse small cap Australian companies. And when we find those companies, more often than not, they're far less researched, the market is far less efficient, and we can get a real information edge, which we exploit. So if you believe this clearly self-serving small cap fund manager up here saying that the small cap index is better, it's more diverse, it's more inefficient, the next key question is, does it represent good value to you as an investor today? We believe the answer is a resounding yes. I send this chart request off to our product team every 6 months or so, and I'm always astonished that the same answer comes back, or at least for the past couple of years anyway. This is a PEG ratio for a range of global indices. And you can see that the small cap market, on a growth adjusted basis, the valuation isn't among the cheapest in the world, it is actually the cheapest in the world. ASX large caps on the other side of the chart here at 4.6 times, very expensive for the anemic growth outlook. So to us, at this moment in time, small caps do represent fantastic value. Now at Firetrail, we have quite a unique approach to investing in the small cap market. We don't care if a stock is value, if it's growth, if it's resources, biotechnology, real estate income trusts, even though they're pretty boring. We invest everywhere. To do this, we employ a team of sector specialists. My co-portfolio manager, Eleanor Swanson, who's pictured here getting some sort of diagnostic imaging scan done, I believe, is a qualified immunobiologist and spends a huge amount of her time investing and focused on the biotechnology and healthcare sector, which has been a very lucrative source of returns for small cap investors and for investors in our fund. My background, as was touched on in the introduction, thanks for that, I do kick rocks, is in engineering and geology, and I spent several years prior to finance working for both BHP and Rio. And I brought along some photographic proof of that in case you didn't believe me, given that I currently have keyboard hands. Now, the outcome for our investors of our industry expertise is very clear. What it means is, if we pick the stocks correctly, it's higher excess returns. Secondly, it means a more diverse portfolio, which leads to more consistent outperformance. And you can see on this next chart here, just a breakdown of what's driven our excess returns since inception. These returns have been delivered using our skill sets, or unique skill sets, I should say, to look right across the market where many other investors just aren't looking to the same degree because they do not have that technical background. All right, so that's our take on the small cap market and how a very condensed version of how we go about investing. Now I want to talk about one compelling thematic, and as I said, you just cannot get away from this at the moment. I was chatting to Kyle just before and he said, don't talk about Trump on stage, so sorry, mate. Now, I don't think it's an overstatement to say that what we're seeing at the moment really is world overturning. And I'm sure that many of you in this room would have spent the morning talking to your clients about what we're seeing in global markets at the moment and in politics means for your clients' portfolios and how they should be reacting. And of course, I'm talking about uncertainty. That uncertainty is both geopolitical and financial, and it's coming from the second iteration of the Trump White House. There's not too many things that you can be certain of in this sort of environment. The one thing that I'm happy to tell you that I'm absolutely certain of today is that global defence spending is going up. Global military defence expenditure has been declining quite steadily since around the 1960s. And in an Australian context, we currently spend around 2% of GDP on defence. Now, depending on the day of the week, there does seem to be bipartisan support to increase this to somewhere between 2.3 to 2.4% by the middle of next decade. That's about a 21% increase. It's going to provide some good tailwinds for small cap companies and those exposed to the defence sector. It's interesting, but it's not super exciting. What is very exciting for us as small cap investors are specific sub-segments of the defence sector where we're not going to see a 21% increase, we're more likely going to see a 20-fold increase. This diagram here, which Katie from our product team has done a fantastic job of recreating for us, is a copy or another representation of a slide that was leaked from the US Department of Defence in 2023. What it shows is Chinese shipbuilding capacity currently versus US shipbuilding capacity. It's a gap of 232 times. There is a step change in expenditure coming in the Western US military industrial complex that needs to happen in the coming 5-10 years. And that's going to see a huge amount of opportunities for small caps. One of the best parts of my job is being able to not only travel, but come up with a thematic or an idea like this, and more often than not find a small cap company to make money out of it. And my most recent travel, 3 weeks ago, was to an island. My boss, Paddy, is here, so it wasn't that fun, but it looks pretty good on the photo. Now, Garden Island is set to be Australia's most important military base. The reason for that is that is where the submarines from both the US and the UK will be stationed on a semi-permanent basis from the end of calendar year 2027. I wasn't able to take any photos on site for obvious reasons, given the security clearances and things required, but take my word for it, there is a huge amount of activity going on there today. Specifically, there's around $30 billion that needs to be spent over the next 15 to 20 years in this precinct in WA. And there's $15 billion that needs to be spent in the very short term, much of that on marine infrastructure. That is going to provide a great opportunity for a range of Australian small cap companies. And this isn't stuff that we're not certain about. These are contracts that are being awarded now. There's a massive amount of activity going on, and the government will pay to get this work completed by the end of 2027. So how do we make money out of this? Well, we first identified this trend or opportunity in 2022. We spent the subsequent 12 or so months modelling companies, meeting with shipbuilders in the US, really getting to understand the industry. We finally pulled the trigger and invested in Austal Ships in around May 2023. They're a shipbuilder, as the name suggests. Over the subsequent 18 or so months, they tripled their order book. They now have 15 years worth of work, 15 years worth of ships to produce. That's amazing visibility. I've seen a lot of contracting businesses, but I've never ever seen a company with 15 years worth of an order book. Now, despite that strong outlook, we do now see the companies being fully valued. We recently exited the position. It's been a great experience for our investors. The next best opportunity, we believe, is a company called Duratec, ticker DUR. It's a bit of a micro cap, so many of you may not have heard of it. They're a specialist marine infrastructure provider to the defence industry. They have the design component of the contract for all that work at Garden Island that I just talked to, and we expect them to convert that through to construction work in the next couple of years, and we expect actually announcements in the next few months. We've done a lot of bottom-up work on this stock and on Garden Island, as you can imagine. And what you can see here are our revenue forecasts over the next 3 years. Two things should stand out to you. Firstly, we see the defence revenue doubling. And secondly, and most importantly, and this speaks to the inefficiency in the small cap market, we're 70% above consensus in FY28 for defence revenue. Now, if we're correct, we expect that Duratec will experience the same sort of share price appreciation over the next 18 months as these contracts are awarded, as Austal did. So to wrap up, we do see a huge opportunity in Australian small companies, not only now, but over the long term because of the excess returns that good active managers can deliver. Secondly, Australian defence spending is set to rise. That's one thing I am absolutely certain of. And thirdly, we do have a lot of conviction in our portfolio, and I've taken you through just one stock that makes up the 40 or so of our high conviction portfolio in small caps. So of course, as is customary, I'll end with the performance slide. Thank you for your time. We're very proud of the returns we've been able to achieve for our investors at Firetrail. We're working really hard to ensure that it does continue, and we'd like to invite you to invest alongside us. Thank you.